what it's like to lose. Feel so desperately that you're right.
And to fail, nonetheless. It's frightening.
Dread it, run from it, destiny arrives all the same.
And now it's here, should I say. I am.
What's up, everybody? I'm Mike Macklin, aka Money Mike, the financial Thanos, because I'm snapping my fingers and turning your financial problems to dust. Now today, I want to talk about something that surprises a lot of people when they first start learning how the financial system actually works. And it's this idea that the way you earn your money can have a huge impact on how much you pay in taxes. Two people can make the exact same income, but depending on how that income is earned, one of those people might end up paying significantly more in taxes than the other one. And for millions of Americans, that difference comes down to something very common, and that's being a W-2 employee. Now hold on, before anybody misunderstands me, there's absolutely nothing wrong with having a job. Most people in this country earn their income that way, so that's not the issue. But what many people don't realize is that the tax system treats different types of income very differently. And once you start understanding that idea, that's when you begin seeing why some people seem to have far more control over their taxes than others do. So today we're going to break down why that actually happens. Because once you understand how the system actually treats income, you start looking at money and taxes from a completely different perspective. Let's start with the type of income most people are familiar with. When you work a job, you earn what's called W-2 income. And the most important thing to understand about W-2 income is when the taxes are taken out. See, when you receive your paycheck, the taxes have already been removed. Your employer has already withheld federal taxes, state taxes if applicable, Social Security, and Medicare. So by the time your paycheck reaches your bank account, the government has already been paid. In other words, employees are taxed first, and then they spend what's left. Now, most people never think about that because it just feels normal. It feels like that's what it is. But that order of events actually plays a big role in how the tax system actually works. Because once you start looking at other types of income, you realize not all income is taxed in the same order. When people really start studying the tax system, they eventually discover that income generally falls into three major categories. Now, the first one is the one we just talked about, and that is earned income. That's income that comes from a job or a salary. Now, the second category is business income. Now, business income is income that's earned from operating a business or from working for yourself. And the third category is investment income. This can include things like dividends, capital gains, rental income, and other forms of passive income. Now, the reason this matters is because these different types of income are often treated differently within the tax code. And once people begin learning that, they start realizing something important. The tax system doesn't just look at how much money you make, it also looks at where that money is actually coming from. This is often why you hear conversations about things like starting a business, building a side hustle, or investing. Because when people introduce different types of income into their financial life, they're also introducing different tax dynamics. Now, to be clear, this doesn't mean everyone should suddenly just quit their job tomorrow. Not saying that. That's not the point. The point is understanding that income structure is what matters. Because when people only rely on one type of income, their options are usually much more limited. But when people begin learning how the financial system actually works, they start seeing additional paths that weren't obvious before. And this is the reason wealthy individuals often approach taxes very differently than the average person. Many high-income households don't rely entirely on earned income. Instead, a significant portion of their income may come from businesses, investments, or assets that generate revenue. And because those types of income are treated differently in certain situations, their overall tax strategy may look very different. Now, that doesn't mean that the system is broken. What it really means is the tax system is designed to encourage certain economic activities. Once people start seeing that pattern, the conversation about taxes changes. Instead of asking, why do some people pay less taxes? What they begin asking is, how does the system actually work? And that question is where financial education really begins, guys. The reality is most people were never taught how income and taxes actually interact. Schools rarely explain how the tax system works, how different income types are treated, or how financial strategy develops over time. So people end up working extremely hard, but without fully understanding the system they're operating inside. And that's why financial education matters so much, guys. Because once you start learning the rules of the game, guys, you can actually begin making decisions that improve your financial positioning over time. Now, if this video helped you see the tax system from a different perspective, make sure you hit the like button and subscribe to the channel. Because during this tax season, we're breaking down how the financial system actually works, guys. And in the next video, we're gonna talk about something that most people don't realize until it's too late. And that is why wealthy people don't wait until April to think about taxes. And trust me, once you understand how tax planning actually works, you realize something very important. April isn't the beginning of tax strategy. It's the end of it. Until then, I'm Mike Macklin, aka Money Mike, the financial Thanos, snapping my fingers and turning your financial problems to dust. I'll see you guys in the next video. God bless you all. Gone.
I am inevitable.